Hello everyone, this is Jennifer. This is the part 2 video of the fund flow statement, wherein I'm going to teach about the statement of funds from operations. So basically, what is funds from operation? The funds raised or earned only from the operating activities. So our second statement prepared in the fund flow statement is the preparation of adjusted profit and loss account. Adjusted profit and loss account is prepared in order to find out the funds from operation. If you see, as an organization, at the end of the financial year, there are three basic accounts which are prepared. One is the trading account, the second is the profit and loss account, and the third is the balance sheet. So in the financial statement, basically all the incomes and expenses, irrespective whether it is operating or non-operating, cash or non-cash, everything are included in the calculation of your financial position of the company. So hence your net profit includes your cash and non-cash expenses, cash and non-cash incomes, and the same way operating and non-operating expenses and operating and non-operating incomes. Hence, we need to prepare a statement to ignore or to reduce back the added amounts respectively in order to come up with the resultant figure of only the funds raised or earned from the operating activities. So to put that in an example, I will just show you. This is a profit and loss account. So in your debit side, you add your cash and non-cash transactions, operating and non-operating expenses. In your credit side also, you add both your cash and non-cash transaction, operating incomes and non-operating incomes. So when you add your operating expenses and non-operating expenses, obviously your net profit will reduce. And when you add your non-operating incomes, you will have your net profit increased. So respectively, in order to come up with the funds from operation, in order to have the correct profit gained from operating activities, we need to ignore the non-operating expenses, non-cash transactions, and the non-operating incomes. So when your non-operating expenses is being added in your profit and loss account, there is a decrease in the net profit, and this decrease in the net profit leads us to adding back all the non-operating expenses, so that whatever the decreased profit that is shown as a net profit, that needs to be raised up, and that will be shown as the correct profit from the operating activities. In the same way, for a non-operating income, when it is added in your profit and loss account at the end of the financial year, this will increase our net profit, which is not showing the correct profit only from operating activities. Hence, we will subtract back all the non-operating incomes and the non-cash incomes, because the non-operating incomes has raised or has increased the profit. Hence, we will subtract it in our adjusted profit and loss account. So I again repeat, the non-operating and the non-fund items will be that have been debited to your profit and loss account will be added back to show the correct profit, because it has been showed as decreased profit, and the non-operating incomes and the non-cash transactions will be minused in order to show the correct profit, wherein it was shown as the increased profit earlier. So let's move on to the funds from operation format. So you first start with net profit or the retained earnings. Retained earnings is nothing but the profit of the company that has been raised after deducting the dividends or other amounts which are paid to the investors. So you start with net profit if it's given in the question, or you start with retained earnings. Sometimes in the question they will give the opening and closing balance of profit and loss account or profit and loss appropriation account. So if they give like that, you will start with closing balance. You will start with closing balance of profit and loss account. So you can either start with net profit or retained earnings or closing balance of profit and loss account as per the question. Then what you will do, you will add all the non-fund and non-operating expenses which have already been debited to profit and loss account. Non-fund transactions are nothing but the paper transaction which does not affect the inflow and outflow of the fund, and the non-operating activities or non-operating items are nothing but the items or transactions which are related to the non-operating activities. Example could be your loss on sale of fixed assets or profit on sale of fixed assets which are not in the normal course of the business. So you will add back all the non-fund or non-operating items or the expenses which have been debited in your profit and loss account. The first one is your depreciation and depletion. Depreciation is the reduced value of the fixed asset, so which is not involving any cash transaction or which does not form a part of the operating activities. And the depletion, both have been debited, hence you will add it back because the profit has been decreased, hence you will add back in order to show the correct profit for your fund flow statement. Then is your amortization of fictitious and intangible asset. So what do you mean by fictitious asset? Fictitious assets are assets which are not fully written off in your books of accounts, and the intangible assets which have been written off in your books of accounts. Under that we have the goodwill, patents written off, discount on issue of shares written off, and preliminary expenses written off. So the fictitious asset best example could be the discount on issue of shares written off, preliminary expenses written off. Premium on redemption of debentures, when there is a premium paid back when redeeming a debentures, so that also comes under the intangible, fictitious and intangible assets. Moving on to the third item, which is appropriation of retained earnings. Under that, whatever transfers that have been made to the reserves, example could be a profit transfer to general reserve, profit transfer to sinking fund, profit transfer to contingency. The appropriation made out of your retained earnings which has been debited will also be added back in your non-fund items. Then the provision of taxation. So provision for taxation and provision for proposed dividend, both of them, when they are considered as current liability, you will take it in your schedule of changes in working capital. If they have been considered as non-current liability, then it will be considered in your funds from operation. And when they are considered as non-current liability, you will prepare the accounts accordingly, the ledger accounts, depending on the adjustment provided. Next is your loss on sale of assets. Either it can be your fixed asset, plant and machinery, land and building, furniture and fixtures. Sale, any sale that are made of asset will involve two kinds. One could be a profit or one could be a loss. When it is a loss, it is a non-operating expense, and when it is a profit, it's a non-operating incomes. When it is a loss, you will add it. When it is a profit, you will minus it from your funds from operation. Minus it from your net profit. Minus it from your net profit in order to calculate your funds from operation. Moving on to the next part, which is minusing all the non-fund and non-operating items which have already been credited to the profit and loss account. It has been credited, hence the profit has been increased. In order to get back to the correct profit, we are minusing all the non-fund and the non-operating incomes. So under that we have all the profits of the assets. If there is a sale and you get a profit, you will minus it irrespective of what kind of asset, the long-term asset. Either it's a fixed asset, plant and machinery, land and building, or furniture and fixtures. Then is your appreciation on revaluation of fixed assets. Then is your dividend received on investment. For example, if the company has invested amount in different companies, that is a non-operating income, the dividend received will become a non-operating incomes. So that will be minused. Next is your profit on redemption of shares and debentures. When you have invested, when the company has invested in another company and they are having a profit in redeeming their shares and debentures, that will become a non-fund or non-operating income. So that will also be deducted. The excess provisions, if there are provisions which are being written off at an excess value, that will be minused, and any other non-trading items already credited to profit and loss account. If they are not relating to the trading items, then they will completely be minus from your fund from operation or your adjusted profit and loss account in order to get back to the fund only from operating activities. Then your net profit or net retained earnings or your opening balance of profit and loss account. So you will have that whichever respectively they have given. If they have given the closing balance of profit and loss account, opening balance, then you will have your closing balance here beginning. You will add all the non-fund and non-operating expenses debited. You will minus all the non-fund and non-operating items credited, and you will take back the opening balance of profit and loss account. Then you will get something called as total B, which is nothing but the total of all the non-fund and non-operating items which are credited to profit and loss account. Funds from operation is nothing but A minus B, which is net profit plus, if they are considering net profit in the beginning, net profit plus non-fund and non-operating items which have been debited to profit and loss account minus non-fund and non-operating items which have been credited to profit and loss account, you will get the resultant figure as funds from operation. Hope this statement is very clear enough. So we will start up with the other kind of format. So this format, the previous format which I thought was in a statement format, the next format is known as the T format. So basically it is the same items, whatever non-fund or non-operating items debited to profit and loss account will be debited here, and non-fund and non-operating incomes which are credited will be credited here. So if we have a debit balance, it is funds from fund to operation, and if it's a credit balance, it is funds from operation. So if you have balance in credit side, it is funds from operation. If you have balance in debit side, it is funds to operation, which is a negative figure, and the other items remain same irrespective of the statement wise. So moving on to the first question, problem on funds from operation. So let me read back the question, which tells the profit and loss account of the company for the year ending 31st/3/2008 and 31st/3/2009 shows the profits 20,000 and 30,000 respectively. So 31/3/2008 is 20,000, so which is nothing but your opening balance of profit and loss account. 31/3/2009 is nothing but 30,000, which is your closing balance of profit and loss account. For the year ending 31/3/2009, provision for dividend was made to the extent of 50,000. So provision for dividend is considered to be a non-operating expenses, hence it will be debited. Transfer to reserve amounted to rupees 40,000. Transfers to reserves are also non-operating expenses, so debited. Depreciation written off was rupees 25,000. Again, depreciation written off as non-operating expenses, so debited. Loss on sale of old machinery amounting to 5,000 was debited to profit and loss account. Loss on sale of old machinery, again it is a non-operating expenses, debited. Sale of investment resulted in a profit. Profit on sale of investment, which is a non-operating income, is credited. Sale of furniture resulted in a profit of rupees 3,000, which was taken to profit and loss account. So profit on sale of furniture again is a non-operating income, so it will be credited. A commission of rupees 4,000 received as a non-trading activity was credited to profit and loss account. So commission of rupees 4,000 received on a trading activity, which is a non-operating income. So again it will be credited to your profit and loss account. You are supposed to calculate the funds from operation. So we will start up. So first we will start up. If the net profit is given, you will write the net profit, but according to the question they have given the opening and closing balance. So by balance brought down, your amount is 20,000. To balance carried down, the amount is 30,000, which is your closing balance. Now we add back all the non-operating expenses. So what are your non-operating expenses? To provision for dividend, debit all the items. Provision for dividend is 50,000. So 50,000. Then to reserve fund, it is 40,000. Then to depreciation, is 25,000. Then to loss on sale of machinery, your amount is 5,000. So that's all is your non-operating and non-cash expenses. Moving on to your credit side, your non-operating and incomes and non-cash incomes. So in the question we have sale of investment resulted in a profit of 3,000, which has been taken to profit and loss account. So by profit on sale of investment, amount is 3,000. Then the next one, they are telling sale of furniture resulted in a profit of 3,000, which was taken to profit and loss account. So by profit on sale of furniture, the amount is 3000. Then your next one, a commission of rupees 4000 received as a non-trading activity. Commission received is an income, so it is a non-trading activity income, so you will credit it by commission on non-trading activity. The amount is 4000. So all the items have been taken respectively. So now let's total it up. Sum total is equal to 50,000 plus 40 plus 25 plus 5 plus 30,000. So your credit side is, so your credit side just has 30,000. You have a credit balance. So buy the credit balance, it is buy funds from operation. The funds earned from operation is 1,50,000 minus 30,000. So you get 1,20,000 as your answer. So your total is 1,50,000. So by this we finishing our profit and loss adjustment account. So your next question, calculate the funds from operation. Net profit for the year ending 31/12/2010. So if it's a net profit, it will be taken as to net profit carried down. So as I read the sum, I will keep doing the answer. So to net profit carried down, you will debit it. Net profit carried down, it is 6,50,000. Profit on sale of building 35,500. Profit on sale of building is a non-operating profit, so it will be credited by profit on sale of building. The amount is 35,500. Then goodwill appear in the books of accounts at rupees 1,80,000, out of which 10% has been written off during the year. So goodwill written off will be debited to intangible assets written off will be debited. Goodwill written off. So you should calculate, it is 1,80,000 into 10%. So you have the amount to be 18,000. Next, old machinery worth rupees 8,000 has been sold for rupees 6,500 during the year. There was an old machine which was worth for 8,000 and it has been sold for 6,500. The value is 8,000 but it has been sold for 6,500. So out of sales, are we getting a profit or loss? So 8,000 minus 6,500, which is a loss. How much is the loss? Loss amount is 1,500. So if there is a loss on sale of any asset, long-term asset, you will debit it. So to loss on sale of machinery, 8,000 minus 6,500. So you get the amount to be 1,500. Next they are telling 1,25,000 has been transferred to general reserve. So to general reserve, to transfer to general reserve, it is 1,25,000. Then the last one, advertisement suspense account. It is nothing but it is a non-operating expenses, which means it is a deferred advertisement expenditure which will be written off in 2 or 3 years. So it will be debited to advertisement suspense account. So your amount is 5,000. So your total is you get 7,99,500. So you have a credit balance. So 7,99,500 minus 35,500 is 77,64,000, which is nothing but by funds from operation. So your funds from operation is 7,64,000. So therefore your total is equal to $7,99,500. So your funds from operation is a balancing figure. Moving on to the next question. Calculate the funds from operation. So you have been given the profit and loss account and we are supposed to calculate the funds from operation. So in this we are given whatever has been taken in your profit and loss account. So in this we are supposed to categorize which is operating items and non-operating items. Only the non-operating items will be taken respectively. So two expenses is nothing but your operating activity which is given in the question. So operating, so you will not consider it. To depreciation, you will not consider it. To depreciation is a non-operating expenses, so it will be considered. To loss on sale of building, non-operating expenses will be considered. To advertisement suspense account, non-operating expenses. To discount allowed to customers, is a operating expenses. So for the expenses which are incurred in the regular course of business is an operating expense. So this will not be considered. To discount on issue of shares written off is a fictitious asset, so it will be considered. It is a non-operating expenses. To goodwill, that is a return of amount, so it will be considered. You will take down the net profit also. By gross profit will not be considered. By gain or profit on sale of plant, which is a non-operating expenses. So we'll start ahead. So first we'll start ahead with the net profit. So to net profit carried down, so the amount is so your non-operating expenses will be debited. I take the amount and the items from your profit and loss account. So you have your depreciation, to loss on sale of building, to advertisement suspense account, to discount on issue of shares, and to goodwill. Then moving on to your credit side, you have the by gain on sale of plant. It is a non-operating incomes, so you credit it in order to calculate our funds from operation. Now by looking at the amounts, the total is equal to all the items have been taken respectively. So the total is 1,19,500. So your funds from operation is equal to 1,19,500 minus 20,000. You get 99,500 as your funds from operation. So by funds from operation 99,500. So your total is equal to 1,19,500. So moving on to the next question, just question number 7. Calculate the funds from operation. Profit and loss account is given in the question. So we will consider which needs to go, which is non-profit expenses, non-profit incomes, and we will consider only those items in calculating your funds from operation. So your rent paid is a operating activity, so it will not be considered. Your salaries paid is also a part of your operating activities, which is paid for your employees. To provision for depreciation is a non-operating expenses. To commission paid is a operating expenses. To provision for taxation, here we are considering it as non-current liability, hence we will consider it in our funds from operation. To general reserve, non-operating expenses. To loss on sale of investment, non-operating expenses. To cost of issue of shares written off, non-operating expenses, it's a fictitious assets. To provision for legal damages which are happening, the provision made, it's a non-operating expenses. So to net profit, we will debit it. By gross income will not be considered in your funds from operation calculation. By profit on sale of vehicles, non-operating income. By refund of tax, it means nothing but we are paying the tax and finally we are getting back a refunded amount, so it becomes a non-operating incomes. By dividend received is a non-operating income. Your profit and loss adjustment account, you will consider all your non-operating expenses will be debited. So we will write down the same way. once I will tell it, which is provision for depreciation 50,000, to provision for taxation 1,50,000, to general reserve 3,000, to loss and sale of investment 10,000, to cost of issue of shares written off 2,000, to provision for legal damages 5,000, and to net profit is 1,65,000. Moving on to the credit side, so we have three items. One is the by profit on sale of investment, by refund of tax, and by dividend received. So we have all the items have been considered accordingly. So your total of the debit side is 3,85,000, and the total of your credit side is 15,000. So your balance which is considered as funds from operation is 3,85,000 minus 15,000, which is 3,17,000. This is nothing but by funds from operations. So we will move on to the next problem in the next video. Thank you for your patience. Thank you for listening. Have a good day.